Mic check 1 2 1 2. The bow tie killer is back. Let's talk about it, family. The first banger on the list, and this one I want you to listen close. Wait, talk to a licensed financial advisor in your area. Investing carries risk, but the first one on the list is not necessarily a long-term play yet. We want this thing to drop before we get in. We, meaning me. I can't tell you what to buy, hold, or sell, but without further ado, it's Lululemon, ticker symbol LULU. Where my notepad at? Hold up. Listen close. I'm not trying to buy this at today's prices. I want this to drop. We got a September rate cut potentially coming out for the interest rates, which could boost the market, but the initial uncertainty could drop the market, especially in the worst month of the year historically for the last 50 years, which is September. So we might get the dip we're looking for, and then closer towards the end or middle-ish, get the rip we're looking for. So this is one that I want you to look for. This video today is about bounce back plays. Now, not them twerk videos that you be watching on the internet all day, not those. I'm talking about bounce back like a stock. So let's pay attention. And I'm just saying that to just keep your attention. I know some people got the TikTok brain, but let's talk about it. Lululemon all time is basically up 1,500%. However, in the last, let's say, few months or so, this thing has come down real bad. So it used to be $511. Now it's a $200 stock, and we would prefer to get it closer into the 100s or even less if we get blessed with this huge drop for this thing to bounce back. Many of you have Lululemon clothes, or you heard of Lululemon. This is a really prominent and up-and-coming brand that's been out for like 2 decades, but they've really been taking on steam in the athletic clothes wear industry now. Let's look at what's going on with them. When you go to Moomoo, which I encourage you to download, again, the link is in the description. I want you to be able to see this information so you can see what stocks have these fair values and these price targets that are making sense. They're saying that the fair value of it is about 305. That's the one on the bottom. And then they're saying that 271 is where the analysts think it's gonna go. But we don't want to just get in now because, again, the ride from 200 to 270 or even 300 is a really, really good ride. But if we could catch it closer to in the lower 100s, then the ride up to 300 is amazing, especially when people start spending more money and buying more clothes because they could get it on those credit cards. Listen, I always encourage you to pay down your debt, but we know the world we live in where as soon as people get the chance to go and buy something on debt, they're going to do it, especially if it's some high-end type of clothes. And Lululemon is fitting the bill to be a great bounce back play. Let's look at some of the fundamentals, and we can see that Lululemon is hitting near an all-time low in terms of the PE ratio, the price to earnings, meaning it's getting more and more cheaper compared to the money that they make. Here's something to see. Lululemon, the company, is struggling with sales growth slowing down and higher costs from tariffs. We also recently heard that tariffs are going to be potentially battled in the Supreme Court about whether they're illegal or not. So with the interest rate cuts, and if tariffs are deemed illegal, who knows what's going to happen. But if both of these things happen, and Lululemon is going to be one of them stocks that has the great chance to blow back up towards those price targets, towards those fair values, because people will spend more money. This is one thing that I wanted you to see in case you didn't understand what's going on with rate cuts. Reuters just recently said that Fed Waller sees the rate cuts over the next 3 to 6 months starting in September. And I want to just tell you, when I'm loading up on these bangers and we making money hand over fist with it, I'm going to send you the buy alerts, and I want you to get my trade. So book a call. The calendar is now back open. I know so many people were waiting for the calendar to open up so they could potentially join the team. So book a call with my team, and then we're going to see what makes sense and if we could get you in so you can get my trades too. The slots fill up quick, so I'm encouraging you to do it at this very moment. The link is in the top of the description, and I'll pin it to the top comment. Lululemon, I would prefer to see what happens with this one, not in the 200 range, even though it could potentially start to bounce back from here because everybody paying attention to it. But in the 180s, that's where I would first, boom, try to strike on it. And then if it came down closer to the 150s, then I would really like it there. But I would always use a stop loss. Listen to me and listen to me close. A lot of people are knuckleheads and they're not going to follow out the full plan. If I get into Lululemon at 180, I'm putting a stop loss at 170. About a $10 drop from where I got in is the max risk that I'm willing to take on this stock. This is not a stock that I could set it and forget it. It's one that I would have to pay attention to in this moment because it's still something I got to watch like a hawk. I can't treat this like I treat an ETF. I can't treat this like I would treat Microsoft. I got to watch it like a hawk. But when the price is right, I strike. Y'all know how we get busy over here. The next one is a long-term one. easy bounce back play, one of the best bounce back plays of all time in its Meta platforms, aka Meta, ticker symbol META. Meta is $737 at the time of this recording. The PE ratio is coming right on down, meaning the PE is 26, and whenever you see a major tech stock, top 10 tech stock with a PE under 30, you usually looking at a deal. Let me put you up on some numbers. Currently, Instagram, which is owned by Meta, they have a user base, monthly users of about 2 billion, and they expect it to go up to 2.4 billion next year, which means they expect a crazy number of people to join in, which is something that we love to see. And then Meta also owns Facebook, and they expect to go from about 3 billion monthly users to about 3.1 billion monthly users next year as well. So their platforms, they expect them to grow at a crazy rate, and we still can make a lot of money with this one, especially if it pulls back and then bounces back. Because remember, the theme of this video, and I encourage you to save it, is the bounce back video. Here's some revenue numbers on them. They've been beating their revenue every single time in the last few years. When you look at this orange line right here and you see it going up, 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 they're showing you that they're going to go from making $41 billion in a quarter to $57 billion in a quarter. And they keep doing better than they even expect. So this means that they are not only adding new people, they're making more money per person than they even expected to do. That Lululemon that I keep telling y'all about, they're saying that the price target is $874. However, the fair value is about $850. So this is one of those rare cases where the fair value and the price targets are actually in agreement. Download Moon, put $100 on it, and start your journey today. I'm telling you this right now. You need to be able to use these tools. And then this one, I wanted to put on your radar, but I'm not encouraging you to go load up on this one like crazy. I would say Meta is currently something that I would buy at this very price, but especially if I seen it down in the 600s or even lower than that, yeah, bounce back like crazy. However, there are never going to be any guarantees on the market, especially if you don't know how to trade and you don't know what you're doing in the market. Now, this is that stock, ticker symbol CAR, aka CAR. This is Avis Budget Group. It's $158. It's up 93% year to date. So they've been pushing, but they were significantly higher in the past. But here are some interesting points on them. Their price to sales is 0.48 compared to their industry of 1.8, meaning they are significantly cheaper than their industry when you look at it from a fundamental standpoint. However, their PE is still in the negatives, meaning that they are not profitable in this moment, but this is something that's going to cause volatility in the stock. And here's another piece as to why I want you to think about this like a bounce back play. When you look at their orange line right here, what they estimate to earn, their estimates is going down from about 3.4 billion in revenue all the way down to about 2.7 billion in revenue. So what is this telling us? They expect to take a big hit in Q4 where you would expect it to be really, really good. When we come around that Santa Claus rally and everything, no, family, they're telling us the money is going to be drying up a little bit. But when it dries up in the short term, it gives us a chance to load up and bounce back and make a whole lot of money. Family, I love y'all. I appreciate y'all. Come and join KGU and get up on my trades before the calendar fills up again. It fills up so often. I've been adding people on the team to make sure that we could get to everybody that is serious about trading. We don't want anybody that's not serious about trading because we are here to really make money and build that long-term wealth. I love y'all. I appreciate y'all. And I made a video the other day encouraging you to pay down some debt, even if it's $5. And if you are doing that, I want to give you a salute and congratulate you for taking another vote for your future success. I'll see you on the next one. Take care.